Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts. And the first chart I'd like to look at is the euro against the dollar. Here we see a bullish opening long white Mariboso. Yesterday that was based upon the old favorites, the old gap at 108.20 to 107.77. The market again punched up through, but this time closed over the combination of the neckline, which is currently at 108.60, of the March-based Cathedral Head and Shoulders top, plus the recent very late March-based downtrend currently at 108.47. Its rise was stopped for a second consecutive day by the very recent 50-cent Fibonacci line of 108.90. Today, we've dipped back down all the way down to the broken downtrend. However, we've also risen to test once again the special overhead, very recent 50-cent Fibonacci line at 108.90. Interesting days ahead as the market bounces between these supports and the resistance. Overall, we're coming to the cusp of the recent diamond pattern. It will be over, I think, in about a week and a half, 2 weeks, if not sooner. So keep a careful eye out for false breaks. Next chart I'd like to look at is cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday, and an interesting one as well. Not because it was based around the previous session's indecisive spinning top. No, that was fairly easy to suspect. No, because it was the first proper close above the upper time, currently 123.89, of the recently drawn and also recently made bearish shift pitchfork for the March to April action. It's increasingly looking as if this new pitchfork doesn't work. So, one more close above the upper time and I'll retire it. Interestingly, the top side was capped once again by the short stroke medium moving average at 124.85, as it also is right now today. Keep an eye on that moving average. Beyond that, with the big behemoth that is the long moving average, currently at 126.55. The next chart to look at is euro against sterling. A small bullish white soldier yesterday, more akin to an indecisive spinning top action that was once again entangled by the neckline below, currently at 86.99, of the March to date potential head and shoulders top, and with both the long moving average, currently 87.24, and the short stroke medium moving average, currently 87.72, sitting right on top of it. Today we're doing the same again. Now, I mentioned before my idea that the last few weeks may be a type of sharp double top action, and we have an initial target X on the downside in the 86.5 area. If we do carry on low to say beyond 8,700, which we have been testing, then I'll resurrect that idea. One final point. I've been trying to figure out why the market suddenly took a flyer on the upside Tuesday last week. It then dawned on me that perhaps, just perhaps, this was the second shoulder in a head and shoulders top with a split head formed since the start of March, hence the neckline we've been testing. More on this should it develop. The next chart to look at is the US dollar against the Indian rupee. A bearish closing long black Mariboso yesterday, a direct result of the recent indecisive actions. The prior day's close just below the significant projected 50-cent Fibonacci line at 76.10 was the trigger. For the real twist was, though, the pattern was also a key reversal down. Today we've gapped lower already, down to levels not seen since late March, and in fairly free territory until the highs of Fibonacci congestion based around 74.57. The final chart to look at is the US dollar against the Brazilian real. A second bearish black crow yesterday, and also a big bearish closing long black Mariboso. Prices punched down and closed below the lower time, currently at 542.77, of the recent March to April based bullish Andrews pitchfork, and equally importantly, if not more so, moved back down below the broken upper time, currently 549.94 of the mildly bullish 2013-2017 shift pitchfork. Finally, we also closed back below the significant high and Fibonacci base at 535.53. This action puts the whole recent April-based bullish action now into doubt. I continue personally to have suspicion about this market. I am not sure quite why yet, other than my decades of seeing such markets, but I suspect there may be some even more volatile action possible. Below now we have the recent 50-cent Fibonacci line at 519.37 and some significant Fibonacci and other based congestion around the 506 to 507.25 area. That about wraps it up. So in the meantime, good trading.